Hey everyone, welcome back. Today we're going to be looking at some pretty interesting signals in the tech stock market.
Oh, yeah.
Yeah, it kind of seems like things are going great, even though we keep hearing all this doom and gloom in the news.
Yeah, definitely. It's an interesting contrast for sure.
Right.
Yeah,
Like the headlines can really make it seem like the sky is falling.
for sure.
But then you see analysis like this one from Lucas Downey
Mhm.
over at mapsignals.com,
Yeah,
and it paints a totally different picture.
right.
He published it just the other day, February 20th, 2025, and it's all about how money is quietly flowing into tech stocks.
Downey's a smart guy. He's all about
Yeah.
cutting through the noise and focusing on what the big institutional investors are actually doing,
Right.
following the money
Yeah,
instead of getting caught up in the fear.
exactly.
Yeah.
He actually calls out three big things that everybody seems to be worried about:
Mhm.
trade wars, interest
Yep.
rates, and inflation.
Oh, yeah, big stuff.
Those are some pretty big things to worry about.
Yeah, for sure.
But he suggests we should be looking past those headlines and paying more attention to where the money is actually going.
Definitely important to keep the bigger picture in mind.
Yeah.
Fear can be a powerful force
Right.
in the market, and it can actually create some
Interesting.
interesting opportunities.
Yeah, for sure.
Yeah.
So how do we kind of see past all the noise and figure out what's really going on?
Well, Downey uses this
Yeah.
thing called the Big Money Index
Okay.
or the BMI.
BMI.
Can you
Yeah.
tell us a bit about how that works?
Yeah, so the BMI basically tracks those big institutional orders.
Right.
Um, think of it like a giant scoreboard that shows you whether these big players are buying or selling.
Exactly.
And right now it's showing us that the BMI has been climbing steadily for 2 months and just hit a new high.
Yeah, it's been on a tear.
That's pretty wild considering we had that big sell-off back in December.
Mm-hmm.
That must be a good sign, right?
It can be.
Yeah.
Remember that sell-off happened back in December? And since then, the BMI seems to be indicating a real shift in sentiment.
Yeah.
Institutional investors are definitely getting more confident, even with all those worries we talked about earlier.
It's almost like they see something that we're all missing, isn't it?
Yeah, maybe.
Downey actually called it
I like that.
healthy risk-on action.
He's got away with words.
He does. He does.
Yeah.
Speaking of December, that sell-off is actually a key part of his analysis.
Oh, okay.
He called it a capitulation event.
Yeah.
334 stocks were liquidated in a single day.
Oof. That's
Yeah.
one of those words that sounds really scary.
It does sound pretty scary.
But it can actually be a good sign.
Okay.
It's like that moment where everyone who wanted to sell has finally sold.
Oh, so it's like the market is clearing out all the negativity in one big burst?
Exactly. It's like releasing a tightly wound spring.
Right.
All that pent-up energy gets released. And what often happens after that is that buyers see it as an opportunity to step in and start pushing prices back up.
So even though it seemed like everything was falling apart in December, maybe that was actually setting the stage for a comeback.
It's definitely a possibility. And you know what? Since that capitulation event,
Okay.
the S&P 500 is up almost 5%.
Wow.
Mid caps jumped over 3%, and even small caps are up a bit.
That's impressive.
It is.
But here's the thing that really caught my eye. Tech stocks specifically have been doing even better.
Oh, wow.
They've been seeing this wave of continuous investment even when other sectors haven't been doing as well.
Interesting.
What do you think is driving that?
That's a great question. It definitely suggests that investors see something unique in the tech sector.
Yeah.
Maybe they believe those long-term growth opportunities outweigh all the short-term uncertainty we're seeing in the headlines.
It's like they're willing to kind of
Ride it out.
ride the wave a little bit and see what happens.
Yeah.
Downey calls it hidden bullish breadth.
I like.
And it's kind of a paradox because traditional indicators don't necessarily show it.
Right.
He actually has some charts that illustrate this really well.
Okay.
Do you want to walk us through those?
Yeah, let's start by looking at the 50-day moving average breadth for
Yeah.
tech stocks in the S&P 500.
All right.
Now, for anyone who isn't familiar with a 50-day moving average, just imagine it as a way to smooth out the ups and downs of the market over time to see the overall trend more clearly.
Okay, so what does this 50-day moving average tell us about the tech sector?
Well, it actually shows that the percentage of tech stocks trading above their 50-day moving average has been declining for over a month.
Okay.
Starting around that big sell-off in December,
Mm-hmm.
based on this traditional indicator alone, it might look like the sector is losing steam.
Okay.
But Downey says that's not the whole picture.
So that's where the hidden part comes in.
Exactly.
Okay, what else do we need to look at?
We need to look at the actual flow of money.
The actual dollars and cents?
And Downey's data shows that while the 50-day moving average was suggesting weakness, there was actually a lot of buying pressure happening, especially right after that December sell-off.
So traditional indicators were telling one story,
Right.
but the money was telling a different story.
Exactly. It's almost like investors were seeing an opportunity that those traditional indicators were missing.
Okay, so money was flowing into tech,
Yeah.
even though traditional indicators suggested weakness.
Mm-hmm.
How do we explain that disconnect?
Well, this is where that concept of vanishing selling pressure really comes into play.
Okay.
Downey's chart actually shows this visually.
Mhm.
The selling pressure that was present in mid-December
Right.
basically vanishes in the days and weeks that follow.
I'm still trying to wrap my head around what vanishing selling pressure actually means in a practical sense.
Imagine a tug of war,
Okay.
right? You've got buyers pulling on one side, trying to push the price up, and sellers pulling on the other side,
Right.
trying to pull the price down.
Okay, I can picture that.
All right.
So what happens when the selling pressure vanishes?
It's like suddenly half the people on the selling side just drop the rope.
Oh, wow.
The buyers are still pulling, but now there's much less resistance.
Okay.
It becomes much easier for them to move the price in their desired direction.
So it's not just about having more buyers.
Right.
It's about removing the obstacle of strong selling pressure.
Exactly. And that's what makes it such a potent bullish signal.
Right.
It can create a kind of chain reaction where more buyers feel confident jumping in
Interesting.
because they see less resistance.
So it's like everyone just kind of piles on.
Yeah, it's like a dam breaking.
Yeah.
Once that initial selling pressure lets up,
Right.
the buying momentum can really take over.
This is a really interesting way to think about it.
Yeah, it's cool.
So we've got this disconnect between traditional indicators and money flow data.
Mm-hmm.
And then we add in this concept of vanishing selling pressure.
Right.
It all seems to point to this hidden bullish undercurrent that's driving tech stocks higher.
And what's really intriguing is that this isn't just some random blip.
Yeah.
Downey connects us all back to those big concerns we talked about earlier, trade wars, interest rates, inflation.
Right.
He suggests that institutional investors are looking past those short-term worries
Right.
and focusing on the long-term growth potential of the tech sector.
They're in it for the long haul.
They are.
So instead of getting spooked by the headlines, they're seeing opportunity in the midst of all the uncertainty.
Yeah, that's the idea.
That's pretty interesting.
And that's where we start to see why this hidden bullish breadth might be something more significant.
Okay, so what's the big takeaway for our listeners? What's the one thing we want them to remember as they navigate this potentially exciting but also potentially volatile tech market?
I think the key takeaway is that there's always more than meets the eye. Don't just rely on headlines or traditional indicators. Dig deeper. Be curious, and don't be afraid to challenge conventional wisdom.
And maybe, just maybe, there's a hidden bullish tide waiting to be discovered. Thanks for joining us for this deep dive into the tech market. We'll see you next time.